Day-long expert-level discussions at CIFA's 10th International Forum held in Monaco's financially and socially exemplar district of Monte Carlo unraveled key causes and insights into why the international financial system has become so harmful today. From shadow banking, liar loans, and fraud, to the stronghold of lobbying systems, corrupt political practices, and failed regulation. The Convention of Independent Financial Advisors Forum unearthed the hard facts behind the economic and financial crises.
The Federal Reserve uniquely had the authority in the United States to stop all federal and state regulated entities of any kind that made mortgage loans from making liar's loans. First, Greenspan and then Bernanke refused to use that authority until July 14th, 2008, which was just a little late.
Goldman reviewed the Greek accounts, and they were false. And in Germany, more recently, so there was a 50 billion mistake in the accounts of the federal state, a mistake of 50 billion euros in the German federal state accounts. So, as you can see, we're living in a system that has led a certain number of financial organizations to go looking for state loans.
In the actual financial turmoil the world is living, we have to speak the truth so that the investor knows what is going wrong and what potentially could go right. And this without political interference or without interference of any financial lobbies.
Thursday's talks also centered on finding solutions whereby future Democratic leaders may implement to build what experts called a virtuous financial system.
When analyzing the crisis, there has been too much focus on the wrongdoings of the financial system, and there was not enough attention to the wrongdoings both on the regulatory, on the central bank, and on the political side.
If you have a problem, the central bank will save you, and that was the worst signal you could have given. And then central banks have faulted as well, and very badly, because at one point an economy must have cycles. It's quite sound. You have to let the economy go through a recession.
But what we have to do is learn the bigger picture from a macro perspective with respect to public policy. It was government public policy with respect to the housing sector that really created the housing bubble in the United States. And this was a bipartisan policy going back, to the early 1990s. And so things like that laid the groundwork for the big collapse in 2007 and 2008. And then also on the public policy side in Europe, where people didn't want to focus on the real issues of debt and in accounting, transparency, and things like that. That led to the sovereign crisis, which is still ongoing.
Experts also examined the state of the Eurozone and what it needs to survive, while reviewing the tug and ties between political and financial power, and what it would take for legislators to free themselves in order to better manage financial crises.
Well, I just hope it's not going to be a witch hunt against the independent wealth advisor, because our industry has been regulated more and more in the last 10 years, and the rules were broken in the first place. So I don't really believe there is much more regulation needed, but much more enforcement of existing regulation should be pursued.
I think there needs to be a new social contract between people and financial institutions, but also a new social contract between people and their governments, so that governments take effective steps to regulate some of these financial institutions. Because otherwise we're going to see a continuing ideology of trying to sell really complex products to the public, which actually won't give any return at all. And I think the sensible governments in the world will start to promote those financial institutions that can provide integrity, independence, and a guaranteed rate of return on some of these products.
Thursday's CIFA Forum discussions highlighted the need for more transparency and better rules of accounting under the umbrella of good ethics. The forum will last through Friday with the end goal of building upon a 10-year CIFA practice of helping to make financial markets become more ethical.
If we can help the investors, the politicians, and the regulators to be more efficient in what they're doing and preserve the wealth and encourage wealth creation, especially for the young generation that is suffering extremely high unemployment rate. And these high unemployment rate are also the issue and the problem that results from a deficient financial market.
Consensus from experts today was on the reestablishment of stability through such measures as the creation of good incentives, a focus on partnerships, and the moral obligation for the use of unshakable integrity by all parties involved. Afaf Kanja for South News in Monaco.